There is no spoon. Hello, folks. It's Top Gun here with you, and I got a good one for you. What does the FOMC minutes have to do with Ethereum, proof of work, and Ethereum Fair? All right. Guys, I haven't talked to you for a while here, so there's a few things we really haven't talked about. The shell game, which erupted when the merge happened. So if you think about it this way, Vitalik made Ethereum. Let's call it Ethereum 1.0. And then there was a fork, which made Ethereum 2.0 and Ethereum Classic. But the people in Ethereum Classic were upset that they were left behind. So Vitalik made Ethereum 3.0 to circle back around and eat Ethereum Classic, that 1.0. But in the process, it seems to have crapped out Ethereum 2.1 and 2.2, as there have been two proof-of-work forks. Now, some interesting things about these forks. So, I did a math sheet, lots of maths, last week to show the insufficient or unsustainability of Bitcoin or of proof of work mining. That's why my serious glasses are on and not the aviators. This is serious. I know the whole world's on fire right now. The market's coming down. I'm like, good. Capitulation's coming. The bottom's coming. I'm prepared. Powder in the keg. Hoorah. Things to buy. Yes. So, I always tend to find the bright side to things, the optimistic side. So, Ethereum has pooped out these two proof-of-work chains. Is it smart to go play on these chains? Because there is hex there, and there should be no cheap hex anywhere. Well, on one hand, proof-of-work mining is highly inefficient, unsustainable in the long term. Now, Ethereum doesn't use the same model that Bitcoin does, where it's going to half the amount that's awarded at the same time. That means that the price has to double. Ethereum can be inflationary and deflationary. That rate can be changed and set. The issue, though, is how much electricity, how much in salaries, how much for building rent? What are the expenses that the Ethereum miners incur every single month or each year, however you want to break it down? Now, as soon as we moved to proof of stake, all those miners basically got rugged. That's right. Too bad, so sad, you guys no longer have a job. You are unemployed. What? It's kind of like when technology comes along and replaces other workers, and all of a sudden, oh, well, my job has been replaced by something automated. I no longer get to work. The miners have been replaced. They are no longer needed. Go home and cry about it. Well, that means all the businesses are going to go bankrupt. They have to find something else to do. And maybe they don't know how to do anything else. That's their skills. So they forked the chain, and then they did it twice. So nice. They did it twice. So there are two competing Ethereums right now. And we'll take a little look at that, because everybody gets excited about Cabr Swap, because you can go in there. They were immediately set up and ready to trade on. Apparently there's some Uniswap front ends going up now these days too, but here's Ethereum. Now, this is probably looking kind of bullish at the moment. Let's go ahead and change this to something a little more perspective. Oh, that's when it came out, and that's where it's gone to. Okay, so a lot of people have been running. Now, essentially, this $5 Ethereum, however much they're minting, what they need is for people to buy as much Ethereum, to spend as much as they have in costs, so they can sell their Ethereum. So you must buy Ethereum. If they spend $1 million a month on their expenses, you have to buy $1 million of Ethereum a month for them to be able to sell $1 million worth of Ethereum a month, for the price to not move from where it currently is at this so exciting $5. It would be really exciting if this chain were going to take off. But they didn't do anything to improve gas rates. The only reason gas is cheaper is the coin is so much cheaper. So no improvements, just forked off what was the proof of work, continuing as the proof of work, with a much cheaper coin. That's a good start. It is a good start, but still some problems abound, even if it is like 300x less than normal Ethereum or 200x less, depending on where it's trading between 1,000 and 1,100 right now, or 1,000 and 1,500 right now, probably at 1,300. But so in order to see this price go up, people have to outbuy the miners that are already established with their costs. So they have to sell into the market to be able to make money to continue to pay their costs to run this network. So they're basically hat in hand begging people, please buy enough that we can keep the lights on. Oh, please, sir, buy some more. They're out there hat in hand begging. Oh, this is a great network. We give you lots of things. They put no thought into it. It's not like Pulse Chain. There hasn't actually been consideration, design, and a whole bunch of developers backing and ready to build on it. They gave no care whether there was like front ends accessible and ready to work these networks. They just ran them and hoped people would come and slap things onto them. And of course, some people are slapping things on. Now, I've talked so negative about these chains. I'm not selling my Hex off this chain. I'm not selling my Hedron off this chain. Just in case I'm wrong, maybe there's enough mania sustainability to make it work. But with the Fed, we'll come back to that. I'm not feeling so bullish on it. But the other reason that I'm not selling, not only that, I don't have a lot of value to extract, but something else that's been really cool. So Hex on that chain, wow, it caught up almost like that's 1/20th of the price, or you know what I'm trying to say. Well, no, you don't. I do math, you don't. Let me do it for you. So if it's 3.6 cents, yes, that's a 30x. A 30x to get to Hex's current price on Ethereum. If it were 3.6 cents, it's below that right now. So it's even less than a 30x. That's how close it got from much, much lower. As we can maybe do the 4-hour thing. Oh, look there. Oh, I definitely zoomed out too much, but there's one of our ramp ups. So in the world of crypto, where you can't buy advertising, literally, you're gate kept. You can't go onto, CBC and go, I want to broadcast a crypto commercial. You can't go on the radio and do that. Media gate keeps it. And even in the community, Hex is a scam. You go on in the ETH chats and you ask, what is this Hex? What is this X popping? You might actually get banned. But people going in there and buying Hex to make sure there's no cheap Hex on any chain, even if this drops, I'm contemplating still, thinking the chain might die, spending $50. Why would I do that if there's no profit even inherently in it for me? That's not what I'm looking for as a sustainable investment. The advertising. The fact that this price chart has been popping off, I feel like that's the only thing I can do to contribute. I can drop $50 in on this. Because if I do, I'm adding to the cause of these candles wicking up. And every time they keep wicking up, a whole bunch of Ethereum users that had never heard of Hex are saying, what the heck is this? We are having an influx of onboarding. This is literally buying advertising, even if the chain didn't succeed. Wow, now there's a thought. Now back to chain success. I'm sure I've already put a thumb on this video, making fun of this should be changed to calls now instead of puts. I don't like to swear on my channel, but that's really wrong. Yeah, I definitely don't go there either. But Jerome Powell in the driver's seat today. So he wussed out with 75 basis points, and I'm like, that's it. It's over. I give up, go home. But then he opened his mouth. Thank you, Powell, for taking back your credibility, because I'm the one here shorting Apple at a whole bunch of places while I'm waiting for Pulse Chain to launch so Hex can do awesome things like make a double bottom. We'll come back to that. Look at this Apple chart while it's going off. So, yeah, if you didn't set a stop loss, this is probably where a good place for a stop loss would have been on this short. But if it's still open, it's okay. We're coming back where it will be in profit. And I threw out another short because I was that confident at the 157 where you'd be in profit right now. So 2 closed shorts in profit, 1 open short in profit, and another open short returning to profit if you didn't stop loss out of it, because we were going down here. Powell, after 75 weak basis points, pull out the sledgehammer, pull out the bazooka. You need to be dropping 150 basis points, 200 basis points. You got to get ahead of inflation like Volcker did, or at least get in the driver's seat and scare the market. So 75 basis points, I'm like, oh, that's it. We're going into a lost decade, and nobody's going to take it seriously. The market's going to trade erratically until everyone is poor and the whole economy collapses. Oh, stagflation. But wait, he came to the stand and announced minimum 100 points for the rest of the meetings, possibly 125. And if he actually keeps to it and raises 100 or even 125 in the next meeting to prove he means it, get in line or you will be put up against a wall. Wow. Powell coming out and laying down the law a little bit, finally, because you need to. You're behind the curve. Got to get ahead of this inflation because the economy is dying. Not dying, but, recession, depression, all those fun little terms. Let's go ahead and get out into some larger view here. What am I looking at? I'm looking at copper. Yep, I'm looking at copper, and these lines were a little predictive. As copper steps down, this shows the pace of economic growth dying, basically. The economy shutting down and slowing because copper is a main industry component. So that's my new baseline for how well the actual economy is doing. It doesn't matter what you see in the job reports. We'll come back and talk about that, though. I know you guys are like, crypto, why do we care? It matters, folks. I keep saying the correlation matters, okay? Because Bitcoin's in grayscale, and it's in ETFs, and it's linked to the NASDAQ, and the SPX, and Apple. And that's all linked to the dollar, and that's all linked to what Powell does. And the entire economy is linked. We're not isolated in crypto. And lots of us are starting to realize that. So, looking at copper as a baseline for the economic growth, the actual activity in the economy to build and push forward, that's basically my baseline. While I'm still using oil as a track of inflation, I'm expecting a whip around here. The trend is your friend until the end, but where is the end of that trend? I have a funny feeling that this is going to be our significant line in the sand, as it has been before and before and before. So I'm having a funny feeling we're going to see some action in and around 75 as we head into the winter with crude oil. I could be wrong. If the economy starts collapsing, the demand might die off and inflation might keep under control. But yeah, I'm still expecting this to surge around because when you zoom out, this is a saucer cupping, which means I don't think we're even going to get down here before we come out and start flying back up for a resurgence for oil, showing the demand is still intact in the economy, even with its slowing, which is a very bad position to be in for inflation. And then the market keeps doing things. Let's go ahead and get into the hour here. Keeps doing things like this. These mania trade-ups. The trend is your friend until the end. This is not the end of the trend. The trend is going to be going for a while on this one, folks. I'd say probably as much of the screen as you can see, even past my head. So let me move it over here. I drew that line way out into 2023 for Apple, because this is not going to be a good quarter for Apple. So the Fed comes out and they say big guns. The market freaks and packs back down. So good. We're probably going to see some battle between the bears and the bulls, but we are going to see the loss of 150 support in Apple. The blue chips, the big caps, will be the last to fall. But what we want to look at now is actually the financial calendar. If I could spell. Yes, on Market Watch. I will share my sources, unlike some of my favorite YouTubers. Well, I'm like, well, that's great, but where did you get that information? I finally found it. So, anyways, we are on the 21st. So, Wednesday, the 21st, existing home sales. Market did not care. Federal Reserve statement. Ooh, cared a little bit. Thought it was good news. And then Powell spoke. Oh, Powell. Way to just F up everyone's day. Powell's great at that. So tomorrow, initial jobless claims. Most likely a horribly cooked number. There probably will not be enough jobless claims. Oh, look at some number expectations. Continuing jobless claims. Current account deficit. Who cares? And leading economic indicators. Nobody's paying attention. Nobody cares. Friday, the S&P U.S. manufacturing PMI flash. Well, this will be a little bit of a pace of the economic, but that's where I'm getting from just watching the prices of copper. So I don't really care. Fed list environment, moderated by Voice Chair. No, we really don't care about what that Fed says. Lil Bernard, no. And Michelle Berman, no, we don't. We really don't care. So we look at next week because that's where the action is going to happen. So basically, we're going to get some argument to settle out the week, probably fight around that 150. But as we head into next week, well, Monday, we're going to have the Chicago Fed National Activity Index. Another Fed zombie. Likely not a lot of movement to the market unless they say something particularly dumb. Tuesday, durable good order. We don't care. Core capital goods. We don't care. S&P Schiller. We don't care. Home price index. It's crashing. We don't care. I'm already ahead of that. Consumer confidence index. It's a lie. New home sales. We don't care. Wednesday, we've got trading goods advanced report, pending home sales. Ugh, still not a lot we care about. But then we get to Thursday and Friday, and we do finally have the real gross domestic product, the real GDP. Do we have the nominal? Don't know if we have the nominal, because that actually matters. A lot of investors don't realize that. Oh, real and nominal actually are different and separate? Yes. In case you don't understand the definition between real and nominal. So, nominal gross. So let's say I manufacture cars, and I manufacture 1,000 cars a month. Now, month over month, there's always 1,000. I'm doing great. Nominal growth, 0. Real growth, 0. Okay. Now, all of a sudden, I only manufacture 500 cars this month. Well, nominal growth went down 50%. Most likely that dragged real with it down 50%, but not necessarily. Perhaps I'm Rolls-Royce and I have pricing power. So even though I'm making less cars, I can compensate by raising my prices so I can lose nominal growth while maintaining real growth. Oh, or I continue to maintain selling 1,000 or manufacturing 1,000 cars per month. And now, all of a sudden, we're in a depression and I have to charge less. Oh, so my nominal growth stays the same, but my real growth drops because I've lost the actual profit. Oh, because there is a difference between pricing power and actual production. Nominal and real. Okay? So we're going to be looking at real GDP, which will probably just confirm some nasty numbers. But then we'll get into the PCE, the core PCE. And the Fed loves those numbers. But really the rest of the month, actually, I thought I saw some more things on this economic calendar when I first looked. But apparently it's a lot of boringness. A lot that the market won't really respond to. The PCE will be the big metric they're using by the end of next week. But really, the GDP on Thursday will probably just confirm its negative stature, and they'll have to be, 3 quarters with a negative GDP. Well, now we're going to change the definition of a recession again. I don't know. Biden's speeches, I don't even want to comment on those. So yeah, really not a lot in the financial calendar for the rest of the month that we're going to be looking at until we see the CPI in October. But I have a feeling we're going to see a lot of battling out, and really, Market Watch, this is where, or somewhere, I'm going to have to check and see where I want to see my options market from the best, because how I really tell market sentiment is the options market. What's going on there, and how does the market maker have to compensate with the gamma squeezes? It helps me keep pace and figure out when it's going up and down. as I'm reading the tea leaves, because I am not a financial investor. I am not a market stockbroker. This is all hobby. I get my information from the back of fortune cookies. Okay, so that's established. Yeah, my general thesis is all of this affects Bitcoin and Ethereum. And Bitcoin and Ethereum are not done dropping. And although dipping under once, not good. But dipping under it again, well, let's switch to daily. We want to see this from a daily perspective. The day, not the hourly even. Now, we can see a little more clearly we wicked under the support for a day. If we close under that, this is only resistance now. You won't getting back over that line. So might as well kill it and just mark, oh yeah, you are stuck in this play zone. It's not a good play zone to be in, Bitcoin. And it's reflective of what's going on in the actual market. Because if Jerome Powell raises interest rates, it becomes more expensive to borrow. Becomes more expensive to borrow, less money around in the system. Less money, less spending. Less spending, less revenues. Less revenues, less ability to afford employees' wages. More layoffs, more firings. More layoffs, more firings, less spending. If everyone is going broke, who's going to buy Ethereum proof of work? If this were in quantitative easing, I would actually say these chains have a chance to take off and work. But as these miners are desperate and basically begging you to buy their tokens so they can sell it to pay their electricity and keep their lights on, well, everyone's going broke, so I'm not sure how much hat-in-hand charity will be left. But for right now, that proud hexagons are keeping your lights on. Because we love seeing our candles go green. Even if your chain dies, it has made so many more people aware of Hex and what a free airdrop might look like. And except Pulse Chain will be so epic because it's prepared. Time was taken. Thought was put in. Game theory. Deals with exchanges. Oh, okay. Yeah, it has a lot going for it. Now, maybe Richard Hart is not a Craig Wright. I think that's a wonderful thing. Sorry, Whale Chart, if I'm being mean here. I'm not gonna call you out on Twitter, but like sometimes I'm just not sure. Like, has somebody stolen all of your coffee, or did you get put on a no bacon diet, or are you just fishing for cheap pulse when it comes to market? Because BNB, which I don't even like, scam chain, BS scam chain, BSC has 30 million users apparently. Fun fact. At the central exchange for Binance. Okay, good for them. That's really good for them. I don't know how many Ethereum users Ethereum has. I don't know how you'd mark that. They don't have their own exchanges. And Pulse isn't launching with its own exchange. But how many users did BNB start with when Mr. Wright launched that thing? It's all about the growth. Starting at low and lots of room to grow. We don't want to start at 30 million users. Starting at 150,000 wallets is more than enough. Or 300,000 if all of his followers are waiting to buy. I am really hopeful for the growth potential of Pulse Chain when people realize it's cheaper than BSC. It's more reliable than BSC. Maybe it'll even be easier to use than BSC. I'm hopeful of a lot of things where I think we might do better than buying it scam chain. Just maybe. Just maybe. It's my personal opinion. It's coming soon. Maybe that means January 2023. When I've been waiting a year already, a few months is soon. Okay? So don't get too excited here and don't crucify me. Alright, so yeah, we've got the... I'm going to give a shout out to KG. You know, I like that guy. He's getting his channel going, and he's been interviewing all of the miners around the Ethereum networks for the Proof of Work and the Fair. So if you want to go check out his channel, that might be a bright idea. And you can go gauge these people and see how serious they are and how much of a game plan they have. Have they put much thought into it? Is Richard has? I very much doubt it. I think they're desperate for a paycheck, and they're out begging, use our network so we can keep making money. Otherwise, we have to find another job. I think they should just, learn how to run validators for Pulse Chain. But that's me personally. And in the meantime, KG goes and shows you a lot of stuff, how to configure your MetaMask with RPC settings, all sorts of yummy information if you do want to go play on Fair. Even if you just want to buy a little to make a candle spike, because Ethereum's candle has really been sucking. And most other things have sucked even worse if they've been buying Ethereum to get out. And then Hex has been doing this. So if you want to show your love and do that, fine. That's up to you. I'm not sure I'm going to, because I'm very poor. I don't have that much love to give to the community to just throw it away. However, my value that's locked on here, well, it's actually worth something today. When the chain first launched, and like 100 times or more or less, I was like, oh god, no, I got what, $2 I can call off this chain? No point. But as this price goes up, I'm like, oh look, I've got some zeros behind that. Oh, but still, I'm not going to cash out. I'm holding it in case I'm wrong and this chain does find some ground. People do want to come and build on it, and they find a way to sustain it. The future's not ours to see. Que sera, sera. The future's not ours to see. Whatever will be. So anyway, I don't have a lot of high hopes for it, but maybe somebody will come. Either way, I've got my value there because I got my free copies. I don't have to go do anything. I can just sit back and watch. And that's what I'm going to do. And a few people do this to Pulse Chain. It's been interesting. I got a lot of data by watching what the ratio trading was like beforehand. So I'm going to be doing a video on pre-bridge game theory for Pulse Chain. And I should probably talk to somebody who reached out to me beforehand. Maybe I'll even bring him on because I think he has some interesting thoughts. So, yeah. I am pretty excited about everything that's been going on. But PoW bringing out the big guns, actually bringing recession. Well, there may not be enough buy pressure on these chains to keep those miners' lights on. And if their lights go off and their power gets cut and they get evicted, nobody's running the miners. If nobody runs the miners, the network doesn't exist. And that is how a network either thrives or dies. So I don't know whether this will thrive or die. If they're going to revamp the technology to run on less electricity to make it cheaper for them as miners, I don't think they can. I think they launched. I don't know what their census is allowed. I don't know enough about the code of Ethereum to know where they're able to make changes. Be interesting to see. It's a lot of chaos. It's the Wild Wild West, but it's not Pulse Chain. So I don't really care enough. I went and got some money ready because I was going to go to crypto.com because I trusted someone, even though I knew it was available on FTX. They're like, go to crypto.com. Oh, I go to crypto.com. Ethereum proof of work was not for sale on crypto.com. My money got stuck in perpetual holding because it got in there no problem, but they didn't want to give it back. It took me over the weekend to get it back. And as it did, I watched the price go down and down. I was like, I'm glad I didn't impulse buy in. And really, I still might go and buy a couple tokens so that I can end my stakes on that chain just in case it survives. I don't know. But I have not been breaking my back, killing myself to hop on here because really I don't know if they're going to last, because PoW is going to keep coming out harder and harder until he does cause a real recession and unemployment jumps up past 6% and 7%. And people are losing their apartments and losing their jobs. So institutional money will not be eager to spend on risk on assets like this. Who's going to buy? Who is going to keep those miners alive? That's the question I'm proposing with this. Really? And I mean it. Who is going to keep them alive? Hexicans right now have been feeding them the liquidity to keep them alive, and that's a little scary in my opinion. But it is what it is. And obviously someone's been selling out and enjoying whatever liquidity comes into the exchanges. So it's interesting to find projects that are so quick on the ball. I have to learn more about these Kyber swap people. I'm not sure that they're even great builders or have anything great going on other than they were fast. They were first. And that does matter in these markets. But also what matters is being safe, because they keep changing the pools that they route through. So people could put in pools with fake tokens that could route through, and those tokens might not actually be exchangeable anywhere. I don't know how this all plays out. That's the thing about the Wild Wild West. High risk for high gains, but not guaranteed high gains. Like, I see this as a 2 out of 3 chance these chains will die within the next 6 months. But I do see a 1 in 3 chance that maybe they'll keep going, but that doesn't mean that they're going to moon. Maybe they'll just barely limp along past that 6 months. There's not a lot of moon headwinds here. There's no big stimulus checks going around where people don't have to already spend it on food and hydro. The state of the world is not in an economic, yay, let's launch this kind of time, where this is a possibly very unsustainable network. So time will tell. We'll find out about Ethereum Proof of Work and Ethereum Fair. We will. But I wanted to hop on to talk about the Fed minutes and the Fed meeting, and actually talk about long term. We're heading into a nasty quarter. Okay, Bitcoin is stuck in that market where sentiment is crap, and unless Apple leads the market into a rally, it is dropping. So Bitcoin is heading for this red line, and within the trend says it'll get there by Christmas. That is literally the 24th of December, Christmas Eve. Like, as a lost stop, where Bitcoin, we're not looking good. Because so far 17,700 has been the nominal support, which is about to get lost. And if it does, we're going straight down to 16. I'm not even sure this is firm support. It's going to be probably some fighting in this range. There's been some hanky things going on where this does not fit the trends normally, since institutional money is so heavy in here. We get almost some institutional whale games, I think, trying to play with Bitcoin, but MicroStrategies, you bought more. I'm so sorry that you're going to be bankrupt in a few months. I wonder if Sailor will end up on the run like Do Kwon. That would be poetic. Now, we've got Hex. And looking on the macro, we finally broke out of the long-standing trend of, oh, push me down. But some will argue that if we move it like this, and we do this, I know you guys love my clicking so much, and we don't measure from the top of this wick, we actually measure from the top of the candles, we get a much more consistent line, and we haven't actually broken out of our trend yet. We're just kissing it. So, all right, the bears are really pushing every bearish trend they can. But look at the RSI, these extremely oversold conditions continuing. It's getting there, folks. So when I remove this, I actually get a little more bullish. Like, do you really expect us to go all the way to 0 to negative by the middle of October? In 4 weeks, can we get negative Hex? I'm rooting for negative Hex. Come on, accept cookies. You and I, the only ones betting on negative Hex. No, it doesn't work that way. The liquidity pool can't go negative. So I'm pretty sure once every single last bear signal's been pushed and crushed, we might actually start seeing some uptrending. It's funny how so many months ago in June I said, right here, tradable bottom, looking for a double bottom. Might just actually get it here. If this holds as a double bottom, we're going off. We're popping off. If we lose it, though, there's going to be more fighting. And I said when we landed here, we would have months of sideways action between these trend lines and prices. And what did we get? Months of sideways action between these trend lines and these prices. Man, I'm feeling good here. Of course, I'm not always right. I am not always right. I'm not a financial advisor. Do not engage on the things I say without actually preparing with things like stop losses. Unless you're just going to hold right out for the macro, you believe this long trend is your friend, and we're going right back down to where we were at 128, because we were there already this year, and fundamentals have gotten worse, which says we should go to a lower price than that. That's fundamentals on a macro, if you're not trading day by day but trading on weeks. Well, coming back down, and it's going to hurt. It's going to hurt. So even if you didn't short or do a call stop loss, you're going to be back in profit on that one. And that's 4 short opportunities on Apple, because this one was right for a day before it popped higher. Wow. And it'll be right again once we come back down. So Apple is going to get a lot of pain. The market still has pain, but now this is where things start to decorrelate. Like, oh, Bitcoin's negative and Hex is up. I've noticed counter trading a lot of days with Hex. So that's another interesting thing that makes me very happy, is its trading pattern looks very different than Bitcoin's when you compare the RSI. I think it's starting to snap out of that correlation. That excites me too, because it had its bear market first. It's tested its pain. It's had its massive corrections. It might have its bull run first. Still altcoin season for the win, possibly. That stuff excites me. And BNB, very interesting that these guys, they broke out, and wow, they've held a lot of ground compared to Ethereum and Bitcoin. Funny they're not dragged around in ETFs as much. Still, fundamentally, this is our new triangle destination, but takes out a lot of the pain possibilities in the range for just how bad it can be. As in, it's not going to hurt as much, and it might also rebound sooner. Which is interesting for coins on chains like this. Like, yes, I go on about Hex and Pulse Chain, but I really respect KG, and I really like this asset. And it's on the Binance Scam Chain, but it's going to get a free copy on Pulse Chain. It's going to get a free copy on Ethereum. Which means whatever you buy on this chain now will hold over there. Now, even if BNB price is getting more stable, it means it won't come down, because the primary liquidity pool on Binance has to be in BNB. So I was worried BNB could lose 50% of its value. Inherently, that would drag this around down too. Although this is curving very nice, like Hex's old W days, when it first started as a small, healthy grassroots project. Get grassroots. There we go. Yeah, you can see. Oh, and we're holding this bull trend, which has been going all this way. Oh yeah, I like this on the altcoin season, and I'm kind of getting hopeful that maybe Hex and I am getting close to their bust, because Hex liquidity very loosely is linked to Ethereum. Very small pool. Heartslaw can still drag it around if it's not getting its own volume, but Hex has been getting volume, and I like that, which allows it to separate. So BNB maybe won't get as hurt as bad as Ethereum in this crash. We'll see. These are the things I'm looking at, because right now Pulse Chain is like a little love baby between BSC and Ethereum. I think it's taken the best of all of them and bringing some more improvements. So when it launches, it should have a much higher success rate than this. Also, its Pulse will launch. You'll be able to get, like, for $1, probably 100 tokens easily. There's no way it'll launch for more than a penny a pulse. And maybe a tenth of a penny. Maybe you get 1,000 tokens for $1 when it launches. That would be pretty cool. Ethereum, oh, you got like 20% of a token for $1. Not even. 18% of a token. Hoorah. Okay. So Pulse Chain, better deal. Get to hold more tokens, have more gas fees for transactions, cheaper gas, faster transactions. I'm pretty stoked. for Paul's chain to come. And I'm really not so stoked about these side chains. And I am stoked for Powell to finally bust out the big guns, because this is what I've been waiting to see, is him come out swinging. So I want 100 or 120. I would like 125 basis points at the next meeting. See him swing. To see Apple come back down to its 130 price. And to see Hex stay above 2.9 cents. Basically, I'm looking to see the pain hit the market, because it's coming, and then see how badly that correlates over. And that will confirm if the correlation's broken. That will confirm if it's 100% safe to go all in and stop DCAing in all responsible like and be like, there's my buy pressure. Not that I have a whole lot of powder saved up to do that. Like, if I spent $50 twice in the last month, I've put away $50 twice. It's $100 put away and $100 spent. $100 DCAing in and a big FOMO buy, saving up. That's the way I spend my money. You spend it however you want. I'm not a financial advisor. In fact, don't do anything that I tell you to do. That would be really bad. Oh, and let's get a little disclaimer out too. So, with IM, I go on about this all the time. I have bought in. I am an investor. I bought in on the wallet. I bought in on the coin. Then they have shown the ability to adapt, which means they listen to me when I rant. And I like to think, oh, yeah, well, you know, I know what I'm talking about, even though I don't. I'm new to the crypto space, but they listen. So I feel like I have a voice in that project, although I'm not a founder. So I have bought my position. I have a voice, and I have received 0 coins, 0 payment. They can get bent as far as I'm concerned there, as long as they just keep building and doing well. So, I mean, there's no expectation of work from them, except there is. Like, I see what they're building, and I'm very excited for it. But, no, I'm not paid to sponsor or shill them. There has been no agreement there. I have even done programming for them. Yes, I have done some light coding for them. You may even see something on their website appear to that effect. I haven't been paid for that either. It's just because I believe in them that I'm volunteering my services. So maybe I'm wrong. That's up to you to decide. Am I right or am I wrong? What do you think about the situation? What do you want to do? Because I cannot tell you what to do. The market is scary, but there are things like Lockheed Martin. Oh, look at this. What is this? This is going to do very well. As in, not lose much value and go sideways or even up as they keep getting defense contracts, because this is a defense contracting web company. So if you want 0 losses and maybe a little bit of gains, 5% a year, this is that safe play. The market has not all gone to hell, but I mean it has. But Lockheed Martin, they're building fighter jets, and oh gee, everybody's going to war because of short resources. I wonder what's a good bet if you're really that worried about the financial hedging your markets, and if you want to have an asset to hold, to leverage against, to do the shorting I'm calling. That would probably be an idea. Don't do it. Don't be a degen. Also, don't do anything I say. I'm not a financial advisor. Oh, am I making you dizzy yet? Does your head spin with all my back talk? I have to. It's so funky because I might dox myself one day. And if I dox myself one day, I will be very liable for everything that I say. So, no, what I say is me reading fortune cookies. All right? I'm talking about my thoughts as I have them and as I teach myself this. I am not an expert. However, I seem to be impressing expert after expert with my questions and with my understanding, because I do keep building it. Apparently, I do have a couple brain cells between these ears to rub together. And that is why you guys watch and stay all the way to my end of my video, even when I don't say like and subscribe. You know, and I'm like, I don't care. This is Wayne's World. It's a basement cable show where I don't have to actually try. I can just speak, share my thoughts, what I'm thinking about the crypto market and the financial markets and the world economy. Sure, let me get it out there. Hopefully it gives you guys some information to prepare for your lives. So I will be coming at you with some more videos. I definitely wanted to talk in the meantime about the scariness in the markets, that basically The CPI last week and the Fed meeting this week were the main hurdles. And Friday next week, we'll get the PCE. That won't be probably not too major. We'll see some of the building stuff, like some earnings reports. Ooh, that's what I need to be looking into. Earnings reports. Let's have a look at that, because those will matter. Earning reports calendar. There we go. Company earnings calendar, Yahoo Finance. That'll work enough for me right now. All right. Wow, all ticker symbols. I will have to go through this information to streamline important businesses and their earnings reports, because as businesses go, hey, we're not making anything, we're going to bankrupt, you're going to see more of these stocks crushing and capitulation setting in. I think this is the quarter of capitulation. Don't pay any mind to the JavaScript. I am not a coder. I'm not a dev. I don't program anything for anyone. Disregard the fact that I said I did earlier. Thanks for sticking around all the way to the end of my show. As usual, I will drop my How to Pulse link in the feed of this show. Thanks for hitting like and subscribe and sticking around. You get a gold star. Till next time, folks, stay frosty.